Share contents. No. Okay. Got him. Great. Go ahead.
Okay. Match the following statements to the appropriate terms. The amount of revenue remaining after deducting variable cost. Contribution margin.
Yeah. Very good.
Cost that contain both variable and fixed cost. Mixed
Right.
cost.
Yep.
The percentage of sales dollars available to cover fixed cost and produce income. The percentage of sales dollar available to cover fixed. Okay, this is contribution margin ratio.
Right.
Identifies the activity that causes changes in the behavior of cost. Identify the activity that causes change.
Yeah. Activity index.
High-low method?
No, activity index.
That's new.
Yeah.
The difference between
margin of safety, brother, I think.
which
No,
one?
no, number 5. Number 5, I'll give it to you.
Number 5. Oh, okay.
We haven't taken that yet. It is called margin of safety. Number 5 is margin of safety.
Yep.
Okay. Costs that vary in total directly and proportionally with change in the activity level. Costs that vary in total. Variable cost?
Right.
The level of activity at which total revenues equal total cost. Break-even point?
Yep.
The range over which the company expects to operate during the year. Relevant range?
Yes.
Costs that remain the same in total regardless of change in the activity level. Fixed. A method that uses the total cost incurred at the high and low level of activity. High-low method.
Exactly. Good. All right.
Okay. Bonita Company manufactures a single product. Annual production costs incurred in the manufacturing processes are shown here for 2 levels of production. 5,000, 10,000. Okay, classify each cost above as either fixed, variable fixed, or mixed. Direct material, it doubles. Total cost, yeah, it doubles, so it's variable. Direct labor also variable.
Right.
Yeah, variable. 18, yeah,
Inshallah, inshallah, ya ghanem.
Utilities, 2, 3, mixed. Rent, 4 fixed. Maintenance, 800, and yeah, mixed. Supervisory salaries, fixed.
Okay.
All right.
There you go.
Yep. Ovenho Inc. had sales of 2,410,000 for the first quarter of 2022. It sold 241,000 units. In making the sales, the company incurred the following costs and expenses. Okay, prepare CVP income statement for the quarter ended March 31, 22. Okay, CVP. We start with the sales.
Sales, yeah.
Had sales of.
Then.
That's unit. No, dollar. So 2,410. Okay. Per unit. So we divide this by the units.
Right.
So we go 2410123 divided by 24123 10% of sales.
Yeah.
Calculator. Percent of sales should be
It's always 100%, Ken. Sales is always 100%.
sales by sales. That's the
Well,
most useless ratio I've ever seen.
We set sales at 100, and then everything has a percentage of sales.
Okay.
Okay. So next is variable costs.
Variable cost. So variable cost. The total should be total, right?
Yeah.
Okay. So we'll take 974,900, which is the cost of goods sold, the variable portion, plus 109. Oh shit.
Yep.
Oh, one second. Plus 109,123 plus 97,123. Should be 118,0900.
It was right.
118,0900. Sorry?
I was saying it was right. I thought the calculator, yeah, it's 118,0900. Yeah.
Okay.
Divide that by the number of units, and you get the unit variable cost.
Yes. Divided by 241,123, which is 4.9. Yeah, 4.9.
Yes.
4.9. Okay. We divide the total by total, right?
Right.
No, you just divide that by the
the variable. What do you got? 4.9?
Yes.
Yeah. Okay, that sounds reasonable.
To get the percent
Yeah.
variable, we divide the total by this one.
Yeah,
No.
you can either divide the per unit by it and get the same percentage, or you can do the total.
Okay.
So
we divide 4.9
divided by 10.
10.
Yeah.
0.09.
It's what?
0.09. Does that sound correct?
It should be 9% then. 0.09.
Yeah, 9%.
9%.
Okay.
No.
No.
Well, take the total variable cost and divide by total sales. What do you get?
118,0900 divided by 241,000.
Right.
0.49, which is
fine. Now take the unit, 4.9 divided by 10. You get the same thing, 49.
I already have this number here.
Yeah, I know. You can do it both ways. You can take the per unit, 4.9 divided by 10, and you get 49. Or you can take the total variable divided by the totals sales. You'll get the same all the time.
Yeah.
Now,
Okay.
yeah, and the contribution margin is simply you subtract.
Yes. So 241,000 minus 118,0900. 122,900. 122,900. Right?
That's right, I guess so. The per unit is
wait. This minus this?
Yep, 5.1.
It's 5.1.
Yeah. 51.
5.1, yeah. Okay, that's right. And then The percentage will be 100 minus 49,
1 second.
which would be 51. You're right. Good.
We should put fixed cost here.
Yep.
Okay. So fixed cost is
Total lows.
total sales minus variable cost, or maybe
No,
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 I
no,
already
you
have
just-
it here. Oh, sorry,
Yeah,
sorry,
you
sorry.
just
Yeah,
add
just-
you just add the
just
ones
hold
next
it
to it.
fixed.
6.
It will be 644 0.
No, it is.
Just make sure. Plus 106 644. Yeah. Okay.
Now you're.
Net income or
Yep.
not yet?
Yeah. Net income.
Okay. My net income.
Contribution margin minus fixed.
Yeah. 100 minus 64423. 585 100.
Okay.
Right.
All green?
Yeah, all good.
Very good. Very good. Doing great.
Okay. Determine the missing amounts. 0 decimal place. Okay. Unit selling price, unit variable cost, unit contribution margin, which is the difference.
Right?
650 minus 420, 230. Contribution margin ratio should be 420 divided by, variable cost by sales, divided by sales,
No, not variable
or
cost.
the other way around.
Contribution margin ratio. You want the contribution margin,
Yes.
which is what? 290?
230 right now.
230? Divide by unit selling price, 650.
650.
That gives you 35%. 35.3. How many they say decimal points? Round your, okay, round. So 35%. Did you get?
Should I put it this way or 0.35?
Is there a percentage sign? Yeah,
Yeah,
point.
put 35. 35. No, sir. I think it's percentage, so not so
Well,
35%. Yeah.
We'll change it if they don't like it. Okay, go to the next one. Now you want the cost.
Now we need the unit variable cost.
Yeah.
So 9 minus, guys, help.
It
Hey,
will be selling price minus contribution margin.
right.
950 minus
530.
420. 530. Okay. Now we'll divide again.
Yep.
420.
44.
44. Okay, I'll take it.
Okay.
45 or 44? Oh, never mind. We have different numbers. Sorry.
It's 0.442. So
Yeah,
it will
yeah.
be 44.
Yeah,
Okay.
we're sorry, guys.
Now the last one, they give you the contribution margin and the contribution margin ratio. So you have to get the sales first. The contribution margin is 30% of sales. Therefore, sales must equal
Oh,
So it
Five.
will be 171.
570 divided by 0.3. Yeah. What'd you get? Okay. Then you got the contribution margin. And then you got the variable cost very easily.
1330, brother.
Okay. One. Okay. Yeah. All right.
Okay.
Very good. Very good. Very
Crane Company bottles and distributes Be Light, a diet soft drink. The beverage is sold for 50 cents per 16-ounce bottle to retailers for the year 2022. Management estimates the following revenues and costs. Prepare a CVP income statement for 2022. Okay. 2022. Doesn't say which one. So,
It says for the year ended 2022.
okay. So we start with sales.
Right.
Sales is 1,750,000. And I can't see how many units they sold.
Hey. What? Oh, you need the number of units, eh?
Yeah.
Okay, it goes up. Now, the sales.
Ah, we have the prices here.
Yeah, you have the price, exactly.
Okay.
So therefore, if it's 50
So
cents.
if it's 50 cents, show the double.
Exactly, very good.
Okay.
Well, you have the per unit already, total per unit, percentage of sales.
Sorry?
Okay. Okay. No, the per unit.
Oh,
Yeah, you got the per unit. They already gave it to you up in the question. 50 cents. Right?
50%?
50 cents.
No, 50 cents.
Half a dollar.
Oh, right. Sorry.
Point.
Okay.
All right, yeah.
Variable cost now?
Oh, no, you have to go over and get the percentage. Move over one. Yeah, variable cost if you want to go in, but
Oh,
you have to go over and put 100%. Right. Now variable costs. Now you have to list the variable costs.
okay. We take the total here or here?
Oh, no, you list them.
Total
Variable costs. What's the first variable cost?
variable expenses. We have direct material, direct labor.
Yeah, those two are variable costs. Go.
There's no direct material and direct costs. Should calculate them.
No, just add them up. Put them in there and add them up later. Variable costs.
They are not in the drill down.
What? Direct material.
Do you see direct material?
Maybe you have to go down a bit.
I think we have to add them on.
No, sir. I think it should be the variable expenses. Underneath, it should be cost of goods sold. Then the selling expense, because it's a different version, sir. For I have Sandhill rather than that. It
So
should be
now you
cost
need
of
the
goods.
cost of goods sold down
Yeah,
under. Mohammed, yeah. Okay, now the cost of goods sold is direct material, direct labor, and variable manufacturing overhead. You add those three. Cost of goods sold.
Is that right? Variable expense here.
Yeah.
Yes, brother, because this is the category
Yes.
of all the expenses.
Yeah.
Okay, so cost of goods sold.
Yeah.
We go here and we take
Direct material.
direct material
Right.
plus direct labor 360
Right.
plus overhead 380.
Great. Now, manufacturing overhead contains both fixed and variable, so we want the variable here.
All right. Selling expenses.
No, that's just cost of goods sold. That's it. Direct material, direct labor, and variable overhead. Three
Okay.
cost elements.
The selling expense is different, brother, and then
Yes.
selling,
Selling expense is different. Just
selling
get
and selling and admin should be different categories, and then you'll have the total variable.
right.
119 T30.
Can I give you an advice, brother?
Okay.
What I do is like I put in all the options first, as in the ones on the sides. You see the
Oh,
label?
yes.
So then
Okay.
you get to know what you're calculating, you know?
Okay.
You want to do
Cost
that?
of-
I will
Yeah,
help you.
let's
Yeah, so the selling after the cost of goods should be the selling expense. Selling, yeah, the third last one. Selling expense, yeah. And then below that should be like the administrative, I think. Yeah, administrative expense.
Okay.
And this all makes it the total variable.
Right.
Right.
And after that, from this, you will have to calculate the contribution margin
Yes.
by, yeah, and then you will get the fixed expense. I think you know this, yeah.
Total.
No, not the total, just the fixed expense.
Okay.
And then you do the exact same the ones as variable, cost of goods, selling, admin, and then total, I think. Right, sir?
Yeah, that's right.
Yeah, so you do cost of goods. Then you do the selling expense. Then the admin, and then the total fixed expenses.
1 second. Yeah.
Yeah,
Okay.
yeah.
Then we have the total.
Now
fixed
you have the
cost.
total. Yeah. The second one. Yeah. And
But why we repeat the selling expense again and the administrative
This is for
expense?
the
fixed. Yeah, because there's you do the variable first, you get the contribution
the-
margin, and then you do the fixed.
So we get a contribution margin, right?
No, the end is the net. It's to calculate the income, the net total income. Does it show
Okay,
income?
right.
Yeah,
Yes.
net income. Yeah.
Okay.
Now it's going to be easy for you to
Selling
understand as well. Yeah.
Yes. So selling expense should be the variable part.
Right. Variable stuff.
965.
Yeah. And variable admin.
260. Okay. Total variable expense should
Yeah.
be the total of the three. 1190 plus
1312500.
13125. Right?
Only 20.
Oh, sorry. Okay, contribution margin should be, we should subtract 175 500 437 500 500. Okay, how do we get this percentage?
Variable cost to ratio. Or you want the unit, divide.
Yeah, per unit.
Yeah.
We divide 1,312,500 by
50 cents. Well, wait, what do you need? The number of units?
yes.
Okay, how many units do you have?
Double this number.
Right, double the sales. All right, now divide the total variable cost by that number. Okay, that's the sales, double it, times 2. Okay, and divide by,
37.
is it 37.5? Okay,
Yes.
37.5 or 0.375. Okay, that is the variable cost. Okay, now you need the ratio. So you take that. Okay, you can get the variable cost that way.
Contribution margin.
Yeah, 50 minus 30 cents, 12.5 cents. All right, and then you need the percentages.
All right. So this is what 30.
Percentage of sales. So take the total variable cost as a percentage of the total sales.
Again, please.
Total variable cost ratio is a variable cost divided by the total sales.
So this by this.
Yeah. Contribution margin ratio is the contribution margin divided by the total sales.
$75.
All right. And
375.
contribution margin 25.
25%.
They have to add up to 100%.
Okay.
Okay, good. All right, now you have to do the fixed costs. Have you done the? Okay, you got yeah. Just plug in the fixed and finish the income statement. Now the fixed. The only fixed in the cost of goods sold is the manufacturing overhead fixed. So
Yes.
just put cost of goods sold and pick that number. Right.
Sir, brother, I did this. You have to change the cost of goods sold. It said it's partially correct. Change the label of cost of goods sold for fixed to the manufacturing overhead. Yeah.
Okay.
No, cost of goods sold will be fine.
No, sir, I did it and it gave me wrong and it said it's partial. Then I changed it to manufacturing and then it said it's right.
Oh, okay. All right. Do it then. That's what they want. To me,
Because
it would,
even though, yeah, it means the same thing. That's what I thought, but yeah.
Okay. Total fixed expense. We total plus 63. 262,500.
okay.
So now we do 157,000, or we should just
Contribution margin minus the fixed costs.
yes.
1,487,500.
Again.
1,487,500.
1,487,500.
Yes.
Okay. Let's see if
Yeah,
your
this
numbers
one
are all right. No, what happened?
1 second. 1 second.
Okay, you've got a problem here with your variable costs.
We have to per
What?
unit.
What do you have up there? Oh,
It
they
should
want
be 0.5.
0.5.
Yeah, brother, it's 0.5.
0.37. Yeah, that's all.
This one.
Yeah.
0.375. So make it 0.38.
Yeah. So that's the way they want the data, but you're not wrong. It's just how
Yes,
you.
sir. I got the same. I got the same mistake.
Yeah, well, it's not a mistake. It's just the computer programmer wants it that way. That's the problem. Okay. Now let's see. You should.
1 second. This one. We subtract
What? Yeah, you need the
contribution margin from the total fixed.
Right.
437,500 minus 262,500, 175.
Okay.
Ah,
Yes.
shit. What's
Okay.
wrong with this one? No, I have this one now.
I
Was it
think 0, 1, 2, yeah, 5.
It should be a 3 decimal place.
Yeah.
Alhamdulillah. Okay. Calculate variable cost per bottle.
Oh, you already have that. You got the variable cost ratio. Just copy that in. 0.375.
Yeah.
Right.
Compute the break-even point in 1 sales unit and 2 sales dollar per
Okay.
unit.
Now you have.
How many units to cover the fixed, right?
That's right. So you divide the fixed by the unit. What's the unit contribution?
So we divide 262,500 by
Yeah.
0.125.
0.125. Yeah.
which gives
You
us
get your
2
answer in
million.
units. That gives you your answer in units. Then do the same thing, but divide by the contribution margin ratio, and you get your answer in dollars.
Or we just put half this amount.
Huh? No,
We
no.
just put half. No?
No, 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 no. No, you want it in dollars now. So you got to go back, take the fixed costs, and divide by the contribution margin.
So
Oh, I see what you're saying. Yeah, you could divide by half, but do it the other way. You're right. You could have divided that by half because it's 50 cents, eh?
yeah. So okay, we'll take the total fixed cost 262,500
Yeah.
divided by contribution margin.
Right.
No, we just did the
Contribution margin ratio, which was,
oh,
I can't see it. It's
1 to
25%. No, by 25%.
okay.
What do you get?
1050.23. All right.
Okay. Yeah.
Compute the contribution margin ratio and the margin of safety ratio.
Oh, you can't. Okay, forget the margin of safety. We haven't gotten that far. That's next class. Okay, you got the contribution margin ratio 0.25. No, it says it's got the percentage there, so you don't do 0.25, you do 25. Okay, submit. You're going to be wrong, but that's okay. We'll move on. You don't have the margin of safety. We'll calculate that tomorrow.
Yeah, can you give us the
answer? Margin of safety.
or we could do
You can try 25. Try 25. What do we got? We got it?
Sir,
yep.
There we go. Okay. No?
no,
Okay.
when I calculated mine, try 27, brother. Try 27. I calculated by 27.
We all have different numbers.
Okay, never mind.
Okay, let's move on to the next question. All right. You're not going to, that's because the margin of safety is something we haven't done.
Yes.
All right, what I want to do is, I want to do the high-low with you, and that's the next question, so.
Determine the sale dollars required to earn net income of 220.
Yeah, okay. No, forget that. That is to next class. Forget it. Move on.
You can't calculate that without the, yeah, brother, without your.
Yeah, that's my fault. I wanted that question, but I didn't want those two because that's the next lecture. Okay, just move on. You'll be all
Oh
right.
shit, I exhausted all my attempt before. Smart.
Don't worry. Let's go to the next one, which is high-low. Okay?
What is the, okay. per cost. Okay. Using the high-low method of analyzing costs, answer the following question and show computations to support your answer. What
Yeah.
is the estimated variable portion of power cost? Factory machine hour.
Okay. Now, the level of activity is the factory machine hours. So
Yes.
what is the highest level? Which month?
19.
19,000.
Yeah, okay, so January is the high. Where's the low? I think it's down there in June, eh?
June.
Yeah.
Okay, 1 second, wait. We take the change
Wait.
in total cost,
Yeah, between the high and the low. Okay, so
which
at
is
the
gonna
high,
be
9,700.
12,400. Is that 12? No, 37. You can make it bigger if you know.
Sorry, can't see.
So, doctor, we take the difference between the power cost, yeah?
Okay, no, you select. To get the high-low, select the high activity, which is February, and the low
Yes.
activity, which is June. Now take the cost at the high, 32,462, right? Minus the cost at the low, 18,300.
1 second.
1416
Okay,
minus
3,262 minus
uh,
18,300.
minus June 18,300.
Okay, put that
And then
number aside. No, subtract that. Okay, that's 14,162. Put that number, write that down. 14,162.
It's gonna be divided by
The change.
the high-low activity.
Yeah. So now you have to calculate.
Yes. It's
19,000
gonna be
minus
19 minus 9,300.
Right.
19 minus 9,300.
Right. And you got
1.46.
Okay, so you divide 14, what was it? 14,130? Huh? You got 1.46? Okay, you got it. Okay, 1.
Yes, doctor.
Very good. Check and see if Mr. Wiley agree. Yes, he
All
does.
good.
Okay. Now,
What is
the fixed.
what is the estimated fixed power cost each month?
Okay.
High, low.
All right. Now let's go to the high. What's the total cost?
32.
460. Now that's
Yes.
partly fixed and partly variable.
Yes.
So the variable portion is 19,000 times 1.46. So take 1.46 and that's 19,000. $1.46, eh? You got that?
Yes.
Okay, so the
26.
variable portion is 26,6. So subtract the total 32,462 from that.
5862.
5862. Okay. All right, now it should be the same at the low. So
Yes.
the total cost at the low is what?
9,300.
No, total cost.
Oh, sorry, 18.
Okay, now how much
300.
is that variable?
Times 1.
No.
Sorry,
That's
divided.
the total cost. You want the variable portion.
1.46 per machine hour.
Yeah, times 9,300. Not 18.3. You want the number of machine hours times 1.46. Right. Times 9,300.
13,578.
So of that 18,000, 13,007. Okay, what do you subtract? No, go back.
Oh, yeah, sorry.
Okay, now subtract 18 from that. 18,300. And you should get the same.
4,722.
No, you did something wrong. Because the fixed has to be the fixed at the same, at the high and at the low.
No,
Okay,
it
let's,
should be the same.
yeah, it has to be the same. Fixed is
Right.
fixed is fixed, yeah.
I
Okay.
think Ghanem, for the high you multiply by 1.4, not 1.46.
No, divide by 1.46. Did you do that?
We'll do it again. I'm sorry.
Okay, take 9300, multiply by the variable portion, which is 1.46, and subtract the total cost of 1813, 18,300.
4722.
Okay, then the first one must be wrong.
Okay.
Have to be the same. Okay, go up to the first one. No, don't change it. Let's go back to the first one. Okay, the first one. Take the number of miles, 19,000. Okay, multiply by 1.46. That's the variable portion. And subtract that from 32,462.
4722.
Hey, you see, the first one you did wrong.
Yes.
Okay, now we got it right. Yeah.
If it is estimated that 11,400 factory machine hour will be run in July, what is the expected total power cost for July?
Okay. What's the fixed portion?
4722.
Right. And the variable portion would be 11,400
Yes.
times 1.46. You add those two together.
We add this 11,400.
No, fixed portion is 4722. Okay, take 11,400 times the variable. Each mile is each hour is $1.46. So multiply that by 1.46.
16,644.
Okay, that's the variable. Now add fixed.
722.
Right.
21366. 21366.
Okay, that should be right. Let's see what he says.
Okay.
Good. That's it, is it?
One
Yeah.
more.
Okay.
Okay. We have a lot of information. Calculate the break-even point in one sales dollar and two number of passengers. Break-even point. So the break-even point, fixed cost divided by contribution margin per unit.
Okay, they want it per unit now?
No, I'm just stating the.
Yeah.
They want break-even point, yes, also per unit.
Okay, do it in dollars first. It's
Right.
easy in dollars. What is the contribution margin ratio?
Ratio.
Yeah.
We should divide this by this, or this by this.
Or what? What's the contribution margin divided by sales?
By sales.
Yes. Okay, sorry.
Yeah, that gives you the ratio. Right.
75%.
75. Okay, now divide that into the fixed, and you got your break even in dollars.
She 9.45.
Oh, let's do it again. Take the break even, take the fixed. Wait a minute. You got the total fixed, 17,250. Divide by 0.7, what was the contribution margin ratio? 0.75? Yeah.
Yes.
Okay, divide by 0.75.
To 3,000.
23,000 is the break even. Okay. Now, we need units or passengers. So how much does each passenger pay?
We divide this by, we divide this by this.
How many passengers? Okay, let's get 4 hotels in. Okay, 1,400. How many? Yeah, divide that by that. Okay. Now, what we need is the contribution margin per unit here, guys. So go to the contribution margin. What's the contribution margin? Never.
25.
Okay. Now, put that in, 25. And that we earn off of every passenger. How many passengers do we have?
1,460.
Okay, so we divide that by 1,460 and we get the contribution margin per unit.
Per unit.
Per passenger. What is it?
We need the break-even point, not the contribution.
What did you get the contribution margin per unit?
It's 17.25.
Okay, that's the contribution margin for each passenger. So how many do I need to break even? Divide the fixed costs by the contribution margin per unit, 17.25. All right.
What was the contribution margin?
17.5, I think.
Does that sound right?
No, that's not right. Okay.
Wait 1 second.
Well, another way you can do it is you can say, what? Okay, the break even is the fixed cost divided by the contribution margin per unit. Now, what's the contribution margin per unit? Well, I have a total contribution margin of 25,185, and I have passengers of 1,460. So what's the contribution margin per unit? Right, divided by
17.5. Let me write it down.
17.25. Now that's the contribution margin per unit. So now divide the fixed cost by 17.25.
Muhammad, where are you, brother?
Wait, bro. You want to know?
Are you with us or not?
Sir,
I'm lost here.
Sir, I calculated using an easier way.
It'll be 1,000.
Yes,
Sir, can I show him an easier way than this?
Okay.
Go up, bro. Go up. I'll show you something else. I do it like this way. So you know that there's 1,460 passengers, right?
Yes.
Right.
And they made 33,580. So you do 33,580 divided by 1,460. So you get how much each passenger has paid, right?
Right.
Yeah.
And then you just get the answer. So yours is 23. And then you see, you go down, bro. Go down. You know that your break-even point is 23,000. So you just do 23,000 divided by 23, which gives you 1,000.
Yeah, but I wanted to do the contribution margin way. That's
Okay.
right. You're absolutely right. But the break even is fixed cost minus the contribution margin per unit.
Yes, exactly. Yeah,
So
sir.
to get the contribution margin per unit, you divide the contribution margin by the number of passengers. But that's okay. Contribution margin at the break even point will be what? What's the total contribution margin at the break even? What's it equal to?
1,000.
No, okay, no, okay.
Wait. 23,000 minus the fixed.
I don't know.
Yeah, minus.
What's the total contribution margin?
23 minus 17. 17,250.
No, it's 25.
Eh?
35.
What is
Contribution
it?
margin at the break even point. Yeah, 23,000. 1 second.
No, never mind. It's simpler than that. No.
Minus 17,250.
Okay, look at. Remember the slides I did. Remember?
5,750.
No. When the total contribution margin equals the fixed cost, the profit is 0. So they're asking you, what's the total contribution margin at 0 profit? Well, it equals the fixed cost. Yeah.
17,250.
Right. So the total contribution margin equals the fixed cost is 0 profit. Okay, you see?
Alhamdulillah.
All right. And that's what they say is the end of the line. Very good. And thank you very much, Kenham.
Thank you.
Okay. Can you see my, I don't know what's going on with share content. Can you see my screen?
Nope.
No, sir. Yes, we can now.
Now we can see it.
Yes,
Okay, good. Now that concludes this. We're moving on to more content. But right now, I have for you, for next week, an assignment. And this is due, wait, where's the assignment? Assignment 2. All right, and this is due next Thursday. Is everybody clear on that? Everybody hear me?
Yes, doctor.
I only hear one person. I don't know if everybody else.
All clear, sir. Clear
20.
like crystal.
No, we only have 3/4 of a class. I don't think it's all clear. Okay, I'm going to make an announcement then. You can see more announcements. New create announcement. Okay, assignment 2.
What's the due date?
To do Thursday, November 11. That's the end of the Second World War. Due Thursday, November 11 at 6 p.m. Okay? Any questions?
Doctor, slide of today, it's included in week 3.
Yeah. What do you mean? Yeah, we're in course material. No, course material. Yeah, we're in week 3. Now I'm going to open up, week 3, we have one more assignment here, target net income, and then we got sales mix. Then we're going to have the quiz. Okay. No, we're going to have the midterm, sorry. Now, down below, you see assignment 2. You did assignment 1, this is assignment 2. You click on that, and I believe there's 10 questions. And it's all on cost behavior, break even, and that. Okay, now let's see, 8 questions.